I'm Matthew Hrycaiczuk and I'm an Associate Director within the Charity and Not-for-Profit team here at Buzzacott. In this video I'll be diving into audit requirements for Academy Trust, so covering a number of topics ranging from general audit requirements to going concern and the audit implications of reviewing that area. So the ultimate aim here is to provide 3 opinions over the course of the audit cycle on the finances for the year to 31st of August. So the first of these is our report as statutory auditors, where we're looking to give the opinion on the truth and fairness of your financial statements. In this report, we're looking to be able to say that we agree with the numbers presented and the disclosures prepared and the additional compliance requirements that the ESFA have, including those around the Academy's accounts direction. The second opinion we give is the Regularity Assurance Report. So this report's specific to Academy Trust, and as well as the assessment of the accounts, this report requires consideration of the broader requirements of the ESFA Academy Trust Handbook. So although the range of areas we consider when assessing regularity is broader, the assurance level is actually slightly lower in this area because our statutory opinion requires full assurance, whereas this is what's known as a limited assurance report. The final area of assurance happens when your financial statements are submitted in December. So this is our opinion over the AAR return, which we have to audit to make sure that disclosures within that compliant with the requirements in that area. Similar to the regularity assurance, the opinion we give over the AAR is limited. Our work requires us to look through each of the key areas, both in respect of your balance sheets and your income and expenditure. To give you an example, you will see a display of a section of our audit file. So there's sections within this for those key areas of the balance sheet, income and expenditure, and we meticulously go through each area during testing across the board. The work we do really is about understanding where your numbers come from to check that they are valid and correct. And the sort of checks we do include things like looking at the sort of information, supporting the figures in the accounts, and analysing these against our expectations, both in terms of what we saw last year, but also what we know to have changed within your trust since. The other thing I would mention is that while we do testing across the board, there is a particular emphasis on certain higher risk areas. For those of you who've been through the planning process with us for audit, you'll know that we issue an annual audit strategy and that within that we identify specific high-risk areas. We then report against those within our post-audit findings report. Against those higher risk areas, we tend to do a bit more work. So within the academy sector, typically, given the large size of estates that any academy trust has, there will be some level of work around repairs and capitalisation that's required. Each year there may be capital work that is over the year end, and one of the risks that we've got a large capital project is that the numbers don't fall in the right period, particularly if you're straddling the year end with the project. While it's easy to consider that the most fundamental thing is to get a final trial balance from you, in order for audits to run smoothly, to make sense of those balances, the breakdown of the year-end control accounts and the numbers supporting those is really important as well. So if you've got accruals, prepayments, fixed asset additions, all of that will need a bit more information around that so that we can do the checking. For you, preparing these schedules also gives an opportunity to consider whether anything could be missing, which should be there before the audit even begins, and to do that final sense check of the trial balance. As part of the preparation, there's also information required from areas outside of the accounting ledger. An example here is those disclosures around staffing. There's disclosure requirements there for payments made to higher paid staff, how many staff you have, and so on. And this typically requires collaboration and input from payroll and HR teams. Another role which is important for audit is your governance team. We need to get a view of how the organisation has operated throughout the year, and we'll ask for things like the minutes of the board meeting, the Finance and Audit Committee meeting, and we'll ask for declarations of interest from each of the trustees and senior management. There's also financial information required, which doesn't come from the accounting system. So these are things like your budgets and forecasts for next year, so that we have a sense of the liquidity position, particularly around at the point of sign-off, and how your assumptions within your budgets time with post-year end positions. So looking at those key assumptions like pupil numbers, which drive so much of your income. Each year you will receive from us an audit deliverables or prepared by client list. This is a list of everything we need in advance of the audit starting, And I'd emphasise that spending time before the audit checking through this list to make sure that the information is available really does help make for a smooth audit process. There may be odd instances where this information is not available on day one of the audit, and if there is any anticipated delays, setting dates for these items becoming available really helps in prioritisation of the areas of our work. So moving on to the regularity, propriety and compliance assurance, there's 2 or 3 elements to this. What the ESFA mean when they want us to give an opinion on regularity is that in essence they want us to assure them that the Academy Trust has spent the money for the purposes that were intended. So if you receive GAG funds, they're really there for educational purposes of the Academy Trust. The ESFA will want to know whether you've been spending it for that purpose and not for anything outside of the main purpose for your existence. And then there's the piece around propriety, and propriety really is about conduct or behaviour, and that means that while money could be spent for the purposes intended, so you could tick off the regularity element, there should still be controls in place to make sure that money was spent effectively. So those areas include things like ensuring procurement processes have been followed, that value for money can be demonstrated, and conflicts of interest were not in place at the time that those agreements were entered into. And then there's the broader ESFA Academy Trust Handbook compliance element, so ensuring that information hasn't come to light during our reporting which suggests the Trust is not following those must requirements of the handbook. It's really important for the Academy Trust to look through this at certain points in the year to make sure that they're complying with the requirements there. So that will include things like the format and distribution of management accounts, disclosures required on the Trust website, rules around transactions with related parties. And in relation to the regularity work, there are common issues which sometimes end up having to be reported in our regularity report and our post-audit report, depending on the magnitude and nature of any issues identified. So for example, sometimes we'll see instances where transactions with related parties, with trustees or senior personnel at the Trust have taken place, but the Trust is not able to provide the confirmation that the value of those transactions were not above the cost. In this instance, the handbook is very clear that they need to be at cost, and so if they exceed that, there's a requirement to be reported as part of regularity reporting. Another example would be when you've entered into a finance lease, so as an Academy Trust you're not able to borrow, and finance leases are deemed in substance to be borrowing. So if you haven't sought the required ESFA permission in advance, then it could be something that needs reporting. The other sort of things just to be wary of or just being mindful of to ensure you're complying is things like where financial procedures manuals haven't been updated and so on. So it's really good to have proper accounting controls in place that enable you to comply with the Trust Handbook. So how is it that we go about auditing that, and what do we get you to compile to help us get that assurance? So if we prepared a self-assessment checklist for our clients, we've done that for a number of years as part of the planning. Once we have the planning meeting, we issue that document alongside various other questionnaires, so the fraud questionnaire, the IT controls questionnaire, etc. The regularity self-assessment questionnaire asks a series of questions, and what we do once we receive that is we check your responses to confirm that the risk mitigations that you say should have been in place during the period were in place. If you're saying, for example, that a particular process was in place or there's a particular form of reporting or authorization, we're really looking for the evidence that that's true and correct for the period that we're looking at. And there's just an extract of a little bit of the self-assessment questionnaire so that you can see the sort of questions that we're asking there. So to help the Academy Trust, in the last column, we also give examples of the sort of things that you could provide to us as evidence that you're complying with the requirements. So there may well be other information that you could provide that's supplementary to those examples, but we request that this questionnaire is completed and made available to us, and ultimately we'll also request that it's signed by the accounting officer prior to the audit being signed off. There's also a couple of other things to consider as part of the audit preparation. One of those is going concern. So when we're speaking about going concern, what we mean is the ability of the Academy Trust to pay its liabilities for at least 12 months after the approval date of the financial statements. So 12 months is a relatively short period of time, and I appreciate Academy Trusts will have a much longer time frame within their budgets where they'll be looking at a number of years. But for the purpose of the audit, we're really focusing primarily on that 12-month window from the date of sign-off. So for most Academy Trusts, if we sign off in December, we're looking to get something that will see you through to the following year, the following December. So the board have to make a statement in the financial statements, both in the trustees report and also in the accounting policies, in relation to their assessment of going concern. And in order to do that, what we need from you, what's really good practice, is to prepare a document for your finance committee or your audit committee that sets out the basis on why you believe yourselves to be a going concern, and we'll then audit those assumptions and the information that you provide. The key things that we're looking for there is your cash flow forecast up to the next December, so the 12-month period. And at the date of sign-off, we'll also be looking at your latest management accounts available to see the results for the year to date and how those tie in with the budgets and forecasts that you'd made, to see whether those assumptions that you'd made are reasonable and appropriate in those key areas we mentioned, like pupil numbers and things like pay costs, which help support the cash flow projections for the following months. So again, this just needs a little bit of planning. The final area to mention is just those disclosures around reserves, and in particular reserves policies. So every Academy Trust has to have a reserves policy, and the objective is that you, in your financial statements and trustees report, state that policy and where you're at in the year end in comparison to that policy. So typically free reserves, when you're considering your reserves policy, are everything that's a part of your unrestricted funds as well as your GAG reserves. So they're really funds that are not designated for anything too specific, and will include your GAG funds, which also sit within your restricted funds but are general enough to form part of your free reserves. So the policy itself will vary from Academy Trust to Academy Trust, and the size and complexity will impact on your policy itself. What Academy Trust will typically do is make a risk-based assessment, and there isn't a set policy that every trust should have. It'll depend on a number of factors, such as your current size of your trust, any plans that you have for growth, any risks relating to specific projects, and more. So as a general rule of thumb, the ESFA might ask for more detail around the level of reserves you're holding if you're holding either below 5% or above 20% of your income within reserves at the year end. So because the reserves policy has that alignment with risk, it's an area which does require consideration in advance of the audit itself. Hope that you found this video interesting. Please do check out the other videos in the series, and thank you very much for listening.